You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is Education Wednesday. Once again for the premier educational options program. It is time once again for Options Bootcamp. My name, of course, Mark Longo from this network upon which so many of you are binging. Let me just remind you again, if you're just listening to Bootcamp, we love you all, but you're missing out on a whole heck of a lot of other content. Dare I say, the vast majority of what we do is not Options Bootcamp. You're missing Option Block twice a week, Vol Views every Friday, of course, This Week in Futures Options every Thursday, Crypto Rundown on Mondays, OPR, which is, of course, kind of the sister show to this program, Options Playbook Radio. You should be listening to that if you're interested in options education. The Advisors option just popped off earlier this week. A whole bunch of other stuff floating around in there on the network. So wherever you're listening to this, wherever you listen to Bootcamp, make sure you're subscribed to the full network. And if you like what you hear, listening on demand, make sure you keep rating and reviewing. It really does help all those new folks out there discover the show. Just like our friend out here, this week's 5-star review comes from DJ MT1. Welcome, DJ MT1. He says, excellent podcast, informative and easy to follow. Oh, well, thank you. Good production value as well. Oh, our editors will be happy about that. Looking forward to more. Well, thank you, DJ MT1. We're looking forward to more of your reviews. So if you like what you hear, again, these are crazy times we're all living through together, listeners. So get in there, get your questions in, and of course, get your reviews in if you like what you hear. If you don't like what you hear, send your hate mail to the black-hatted one. You know who I'm talking about. The man, the myth, the black-hatted legend, Mr. Dan Passarelli from Market Taker Mentoring, who what the cool kids call to Mr. P, welcome back to the program. Why does that still crack me up so many months later, sir? It brings a smile to my face every time.
Mark, somebody's got to laugh at your jokes. It might as well be you.
Might as well be me. I'm here in the studio, been stuck in this studio for years now, sir. At least I crack myself up as we keep on rolling right on into some options drills.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
So festive. It may be the depths of a blizzard, a serious blizzard here in Chicago, listeners. The schools are all closed. You look out the windows of the studio here, and all you see is white. You cannot even see the Chicago River. It's one of those. People think we get these a lot here in Chicago. The truth is we really don't. But once in a while, we get a few of them. I think back a few years back to the infamous Chiberia period where, it was minus 30, 40 degrees for a while out there. That was fun. But outside of those, we really don't get those. But that, of course, means it's always fun to hear those celebratory summertime type themes like we have on this program. And Mr. Dan, we're going to get into today's topic in a second. We're going to get all sorts of gamma squeezy. But before we get there, before we start squeezing that gamma juice, sir, the kids want to know, what's your rating, sir?
Well, I've been doing a number of different raids this week. NNDM is still one that I'm holding on to here.
Yes, I have some thoughts on that one. We'll get to that in a second.
Oh, wow. How about this? Okay. It's very interesting. And, I've been doing a lot of earnings trades recently because it's earnings season. And that's what I do during earnings season. It's my hobby. And so that's what I've been doing mostly is trading earnings.
So you're still all in on NNDM then? That one's been an interesting one to watch. I think I told you at the end of last show, I was joking with you on the show, only half joking. I said I'm going to put in a bid for some of those. What were they? The expiring this Friday, 3.5 calls, I believe. NNDM listeners is, of course, one we talked about on the show last week. Nano Dimension Limited. But either way, this was an interesting one to watch. You were complaining at the time, I remember, Dan, about the market makers. They didn't want to really bid up the vol on that call strike for whatever reason. And I'm with you. It's funny. I threw that bid in kind of as a bit of a fun joke. We could talk about it on the show this coming week, I thought. And I put my bid below the market. They hit me almost instantly. So clearly they were looking for some bids out there. So I was long those 3.5s. I wrote them throughout the end of the week, and the stock kind of bounced around a bit. Got a little bit of a pop. I was trying to work some offers to the upside, and I kind of saw what you were complaining about, Dan, is that the market makers, for whatever reason, didn't want to bid it up there. Right? They didn't want to get it up there. And so as a result, I never really got that offer I wanted to get off for my calls. And I finally got out of them yesterday, I think. Yesterday, yes, or 2 days ago, Monday. I think close on Monday. I kind of scratched them because I thought, okay, I've had them on for like 3 or 4 days now. This is a weekly. If it doesn't start moving now, then it's pretty much it's going to erode. So I'll just take these bad boys off. So I kind of scratched them. And sure enough, Dan, the second I did that, right? The second I did that, the next day, yesterday, Tuesday, I think is when it popped. And so I could have doubled them and taken them off for a nice little win. But that just shows the deep cynicism in me. I was like, okay, it's a weekly. Got to get the heck out of Dodge. And that was the moment. They were waiting for me to take my 10 law off, Dan. And then they just popped it to high heaven the next day. So what I'm trying to say to you is you're welcome.
Yeah, I'll tell you what, man, trading these short squeezes are super, super fun, especially when a gamma squeeze takes place.
Ooh, look at you making a little bit of a segue into this week's topic, listeners. Yes, we are going to dive deep into gamma squeezes this week. Dan kind of suggested this. He's been talking about this with a lot of his students of late, and it seems like an interesting topic to revisit. Before we get to the deep, dark rabbit holes of gamma squeezes, quick refresher on gamma, of course. It's not Rho. It's not the completely forgotten Greek, but it is the Greek that a lot of people kind of bounce off of. I get it. It's intimidating. It is effectively a second-order Greek. Remember we were talking about those? If you don't know what those are, listeners, go look in our archives for our episode about second-order Greeks. You'll see exactly what we were talking about, your Vannas and your charms and all that good stuff. But technically, gamma is one of those as well, because it's not really measuring its own thing. It's measuring the rate of change in another Greek, which is, of course, delta. Your gamma, of course, measuring how fast your delta is going to change. And so that's why I think a lot of people get intimidated by gamma. Is that your perception as well, Dan? I mean, you wrote the book on the Greek, so you obviously have been talking to people about gamma for a long time. A, do you think gamma is the most confusing of them all? And B, do you think it's for that reason that it's really kind of a stealth second order Greek?
Well, I mean, I think it's the least tangible and the least realistically quantifiable. Like, you can look up the gamma in your option chain, and you can look up the gamma of your position that you have on. But, gamma changes, and like, what does it mean? Like, in order to figure out what the money you're going to make or lose is by looking at gamma, like, there's a lot of steps involved, and it's really messy. And so it's kind of hard to use gamma in that regard. For a retail trader to say, okay, here's my position gamma, that means that, my risk or my reward is this. It's a big leap where, like, with delta, it's like, yeah, stock goes up $2. This is what I make on delta. Boom. 2 days pass. This is what I make or lose on theta. Boom. With gamma, it's just a little bit more. There's more thought iterations required.
Yeah, it's more of a logical leap, hence the second order, because you're right. I tell you a gamma of 6, people don't intuitively know what that means, right? They tell you you have a delta of 50. You know what that means. You can kind of work with that, right? So it's a weird Greek. And things get even weirder, Dan, when we start getting into the world of gamma squeezes. So let's start there. What was it that made you really want to talk about gamma squeezes this week?
When I'm trading these short squeezes, gamma squeezes end up becoming a big part of it. And I think we've kind of alluded to that on shows in the past, but never really drilled down. And then also I have had a one-on-one coaching student that I was working with this week who was really taking a big deep dive into gamma squeezes. And I thought, you know what, this is something useful to our audience.
All right, so let's start at the basics. Some people may be familiar with this. It became a big topic of discussion after the GameStop explosion last year. That's the first time I really heard the term gamma squeeze, making it into the mainstream financial conversation. Obviously, we talked about it and chatted about it before on this network, but we know we're speaking to the choir here, getting out there into the more mainstream vernacular, hearing gamma squeeze discussed about a year ago. That was kind of interesting. So, Dan, let's start there. Let's set the table. WTF are gamma squeezes, sir?
Well, okay, so I'm going to need the floor here for a little bit.
I'm going to go get a beverage. I'll be back in about 35 minutes. Take your time.
So what gamma is it's how much your delta changes. And where that really becomes relevant and where that is very quantifiable and tangible is when it comes to market makers. Because like every time a market maker trades an option, and let's just stick with call buying and selling, right? When a market maker sells a call, the market maker has to buy stock times the delta in order to get delta neutral, delta hedged. And that's rather simple and straightforward. The number of contracts times the delta is the number of shares you got to buy. So what that means is when you're delta neutral is that the delta on your option position equals the delta on your stock hedge position. And so if the stock goes up or down a little bit, you don't make or lose any money. But if the stock goes up or down a fair amount, then your delta changes and it gets bigger or smaller. And so then the market maker is not hedged anymore. And the market maker needs to buy or sell stock in order to re-hedge is what they call it. And so when a market maker sells a call, which is what they would be doing when it comes to short squeezes, when a market maker sells a call, they buy stock and they get what's called negative gamma. So what that means is when the stock goes up, those calls get more in the money. And so the delta becomes bigger. And so that means if the market maker bought X number of shares, well, if the stock goes up and the delta becomes bigger, they didn't buy enough shares. They've got to buy more shares now. So as the stock goes higher, because they have negative gamma, they're forced to buy more shares just to rehedge, not because they're bullish or anything like that, but just to be responsible, to get rid of their directional risk. And so what that can do is exacerbate a short squeeze. And especially when there's like a whole bunch of call buying that has gone on, leading to a whole bunch of short open interest in the market maker's inventory, it can end up being a big deal because market makers might have to buy, tens of thousands or collectively hundreds of thousands of shares if there's a big move. And it's like dumping gasoline on the fire for some of these short squeezes.
Yeah, this is the topic. Like I said, this has been an interesting one to see play out in the broad financial media of late. Would you say, Dan, that you noticed as well last year around the GameStop time is where you really saw this term kind of break into the mainstream a little bit more?
Yeah, I don't think I'd ever even heard, I've been doing this 29 years as of this year, and I don't believe I have ever heard the term gamma squeeze until a bunch of, 20-something-year-olds on Reddit were throwing it around.
Yeah, we used to call it in the SPX. We used to call it mostly upside crashes, right? Because you were short times or you're blowing through a bunch of strikes that the whole pit is short. So for everything you just laid out, everyone's short gamma, everyone's buying up. In that case, it would be S&P futures. It could be the underlying shares, whatever the heck it is you're trading. We used to just call them upside crashes. We never really called them, gamma squeezes. There wasn't a particular term for it, but it did kind of become codified around that GameStop phenomenon for reasons you can understand, listeners. They were blowing through strikes that if you were a market maker out there, you never had really any anticipation of really seeing until that started popping off in mid-January. People forget we did a death poll, GameStop versus Bed Bath & Beyond, a few months before that. I think it was October of 2020, something along that time frame. We were guessing which one of these names was going to go the way of the dodo first. And then lo and behold, 2+ months later, GameStop is on the tip of everyone's tongue and is blowing through not just the 10 and 20 strike, but the 300 strike. So if you're a market maker, you got kind of caught with your pants down there a little bit, and understandably so. And in this case, the market makers got caught, obviously dumping a lot of upside call strikes. And then as we started blowing through, not just those strikes, but the strikes above them, the strikes above them, that negative gamma really started to kick into high gear. And it acts in many ways as an accelerant, listeners. People think gamma squeeze is the cause for these things. It's not always the cause. As Dan was mentioning, kind of the short squeeze, something else has to be the catalyst that kind of kicks off the upside movement. But once you have that movement, once you have that inertia or momentum to the upside, that gamma squeeze is going to act as an accelerant. It's really going to speed things up to the upside. So, Dan, we talked a little bit about GameStop. What are some of the other names where you see particular risk or opportunity for gamma squeezes, sir?
Well, there's a number of them. And, for our options rater that I've talked about on the show a number of times, what I do is I sort of curate a basket, and I actually do this by hand. I go through roughly about once a week, and I go through and I find like all the stocks that have high short interest, which is above 15%, and good numbers. Not companies that you look at and you're like, geez Louise, this company loses more every quarter. Holy cow, no wonder everybody's shorting it. But like the ones that look like, you look at it and you're like, well, why is this company so heavily shorted? Like Rocket, RKT. Like, man, these short squeeze guys have been squeezing the crap out of that for like a year. And I still can't understand why. I look at their financials and I'm like, you guys are crazy. So like that's one that I figure is probably going to come into play. And I think there's a fair amount of open interest on that one, if I'm not mistaken. Let me bring that up a second here. I mean, that's one that I would not be surprised if we see a short squeeze that benefits from a gamma squeeze as well. And the volatility is cheap as dirt in there too right now. Like that one's primed.
Yeah, they have come for Rocket quite a bit. In fact, we have a question of the week right now, listeners out there. That's along these lines. We said to you, many of you are starting to scoop up hot pandemic names that are currently trading at much lower levels. Rocket would certainly qualify for that. Which of these former high flyers are you adding to your bargain hunting, easy for me to say, / turnaround portfolio right now? I gave you 3 choices, but a lot of opt-ins there as well. Peloton, Robinhood, AMC, and other. And I will tell you, Dan, we just had, looks like right before showtime, we had Vladimir right in with Rocket. He said Rocket is his largest holding. See you at 40. So he's with you. He's in on the Rocket. Dan, if you have a thought here really quickly on which of these names you think, AMC, Hood, or Peloton, or maybe you want to write in Rocket as well. If you have a vote, have at it. And then be more importantly, what do you think our audience is voting for, sir?
I am going to Peloton is not really that heavily shorted. I mean, there is some of the shorting that happens in dark pools, which is a little bit tougher to read. There are some, indications on that, but the accessible short interest data here says Peloton's only about 12% shorted. Just like exchange traded. But I would think that most people would be saying Peloton. That's what I think. I would say Rocket. But
you joined the write-ins for Rocket. That's one of the reasons I like doing these things, see what the write-ins are. Gotten some love for Rocket here. Space, Rocket again, DraftKings. But it looks like right now, Robinhood is winning right now with 46.2%, followed by AMC 30.8%, 15.4% for Peloton, 7.7% for other. If you haven't played along, you're listening after the fact, you got till the end of the week at Options on Twitter to make your voice heard out there. But these are specific names. In general, you mentioned kind of the short squeeze, the heavy short interest, Dan. Are there any other characteristics you've noticed of names that tend to maybe be leading into or are good candidates for a nice gamma squeeze? Is there a certain price level or price range where the stock tends to hover? Any other characteristics you've noticed of names that are either about to or primed for a good gamma squeeze, sir?
I mean, there's a lot of them. I probably have a good 60 in my basket. High short interest above 15. I look for positive earnings and ideally earnings growth. And like, there's got to be a catalyst. Like, for example, Rocket is such an ideal candidate, but it's just not happening right now because people are like the people who I guess instigate these short squeezes. And actually, Rocket short interest, exchange traded short interest, does appear to be a bit lower. It's only about 10, but that doesn't count the dark bull stuff. But yeah, it's got to be being talked about. There's got to be a catalyst. There's got to be somebody who lights the powder keg, so to speak. And like, you find those folks on like subreddits, and there are certain websites to look at. And so like trading these short squeezes is easy. And I like literally just tell people how to do it, like just like I did here. Like, I'm not holding anything back. Like, these are all the things I look for. But in order to trade them, you have to see them happening, and you really can't, like, you have to see them happening real time, and you can't like just go through 60 stocks over and over again in a circle, because like, you're going to miss it. You just don't have that many hours in a day. So what I've done is I worked with the CBOE in creating basically an alert. And when we see certain call buying criteria happen, it just sends an alert right to our window. And it alerts us like, hey, look, this short squeeze might be taking place right now. And so that just makes the whole thing easier. Like doing all that work to curate the baskets, that's sort of my cross to bear. Like, and I love doing it, so I wouldn't have it any other way. But I think that's the real benefit when trading these short squeezes, is to get that alert, to get identified that, hey, look, this is happening right now. Go.
Yeah, so to recap here, gamma squeezes, you may have heard the term, you may be confused. Of course, they do relate to that Greek that everyone is so confused or intimidated by, which is, of course, your rate of change of delta. And, of course, a lot of these names that are having these gamma squeezes, people always blame the gamma squeeze. The gamma squeeze, again, is not the catalyst. It's not going to be the inciting event that makes the stock take off. Usually, it's all these other things have to factor in. Dan was talking about the short interest. A lot of market makers short upside strikes as a result. So it has to be kind of a bit of a perfect storm. And then something, whatever it might be. Maybe it's a short squeeze that kicks off. Maybe it's someone else, an analyst rating. Who knows what it is that kicks the stock into the higher mode. It starts it moving. And then once it starts moving, it starts blowing through these strikes. That's when the gamma squeeze can act as an accelerant, where you're blowing through a lot of strikes that the market makers are short. As Dan was mentioning, they are short gamma on those strikes, so they have to buy back shares of stock to maintain their delta neutral position. And the more short gamma they are, that's why short gamma is such a difficult position, listeners, because it works against you in many capacities. And as you keep rallying in these underlyings, you get more and more short gamma. Guess what? You have to buy more and more stock as the stock continues to rally. So obviously it's a bit of a worst case scenario. So that's where the gamma squeeze effect really kicks in. It is not the short squeeze. It is separate from that, but it is an effect you see that goes along with the short squeeze. Once the short squeeze or whatever it is starts pulling the stock higher, the gamma squeeze is like fuel to the fire. It really will start kicking things into high gear. So that's something to watch out for. As Dan mentioned, he spends his days when he's not talking to me looking for these types of names out there. So you can, of course, hit him up over there at MTM if you want to learn more. There are a lot of names that are poised for this and they're interesting. We still are in this, we are a year plus into the meme phenomenon, but still are a lot of names that are intriguing out there. So there's something to arm yourself with, something to be cognizant of as you're out there trading. If you have a name that's heavily shorted and you're kind of wondering why it's blowing past strikes that maybe you didn't think it was going to, or moving to the degree to the upside that maybe you didn't think it should or weren't prepared for, a gamma squeeze could be your culprit. So be prepared for that. It's also a reason why we say a lot of times here, don't get short units if you can avoid it, because things like this could kick in and really wipe you out if you're not careful. So that's a hard learned lesson. Don't just think we're saying it out there willy-nilly. Things like gamma squeeze and other things could really kick in and turn a move that is slightly adverse against you into a very devastating thing if you have a bunch of short units. So something to be cognizant of. We kind of just wanted to arm you with that knowledge. If you have questions about how these things work or how they unfold, or if a particular trade was a gamma squeeze or something else, hit us up. Let us know. Speaking of hitting us up, it is that time, listeners. It is time for your mail call.
Mail call. Time to look at questions submitted by our listeners.
Speaking of our listeners, Dan, we got our live listener, Mr. Unlimited. He's green with you. He says the March 2030 vertical in for Rocket. Oh, not even March monthly, expiring on March 3rd. He says he might add a few. It's for three. Oh no, it's for March. He says he bought it for 3 cents. I take that back. So there you go, Dan. 2030. That's an aggressive move. Dare I say it? It might take a gamma squeeze to get up there. The stock's at 12 right now, Dan. What do you think about a March 2030 in Rocket for 3 cents?
For 3 cents, I freaking love it. Yeah, that's. Wait. I've got to see if I can still trade that because I'm gonna pile on this guy.
Uh-oh. Unlimited. He's gonna bid up your spread for you. He's gonna be 5 cents now when Dan's done. Watch out. So there you go. March 2030. Can we get there 8 handles or so, listeners, by March expiration? What do you think? Let us know. Hit us up. Obviously, a lot of you are fans of good old Rocket, judging by your write-ins here. Let's also look really quickly. We have another question of the week going right now, which is on the skew side. So we've seen skew in a lot of the major indices flirting with some high levels recently. Not so much this week, but in recent months. Wanted to know, what are your preferred trades in these high skew environments? Gave you multiple choices: your long put spread / collars, your short put / spreads, easy for me to say, / bullish risk reversal, which is, of course, selling the put, buying the call. So obviously the flip side of the collar, listeners. Put flies or ratios or other. And Dan, what do you think people are choosing right now for their preferred trades for high skew environments? Sure. Are they going long puts? Are they going short puts? Are they doing put flies or ratios or something else?
Oh, boy. I mean, I would say people are probably selling puts personally. I just think we see that all the time.
Well, you, sir, and about 53.8% of our audience agree. They're in the short put / put spread / bullish risk reversal camp. So they want to harvest that premium, which, again, can't really fault you for. Those puts are juicy for a reason. They're very difficult to buy and make money on right now. Long puts, 15.4%. Tied, actually a 3-way tie for the rest, with put butterflies and ratios and other. And I hate when people choose other and don't send in what their idea is. So if you choose other, let us know what your actual trade is. We like to hear that stuff. All right, let's keep on rolling here for the questions. So here's an interesting one. Mr. Dan from Vincente, maybe Vincente. I'm going to go the Italian way. Vincente. He says, what are your thoughts on stock substitution in SPY right now? It seems like a no-brainer given where we stand in the index and the current level of volatility. Well, you sound like our buddy, the Oracle of New Hampshire, who was on our Advisors Options show, Mr. Matt from Orats earlier this week, because he came out and said almost the exact same thing. He said, if you're not doing stock replacement in SPY and SPX at this point, you're missing the boat. There's no reason to have that type of risk given how cheap the calls are right now. So you and Mr. Matt Vincente are simpatico on this one. Dan, I've been talking about stock substitution in SPY and the S and pretty much any major index for a while. But what are your thoughts here on perhaps taking some risk off the table and swapping into a stock substitution right now instead?
You know, it depends on the price, right? Everything always depends on the price. Let's see here. SPY. I just kind of want to take a little look-see here for a minute. Because I think that, like, universally saying buy leaps instead of, because that's what we're talking about when we say stock substitution. I think that universally buying leaps in the money leaps as opposed to buying stock is not necessarily always fantastic. But let's see here. If we bought the 430 calls, let's just say, we could buy those for about $22 over parity. Geez, so that's 5%. That is about 5%. Wow. So that's actually pretty impressive. I mean, if you're willing to give up 5% of your portfolio over a year period, that's really a pretty cheap year-long put, isn't it?
Yeah, that's not bad. I mean, most studies, if you look at doing like monthly puts, you're going to give up anywhere from 8 to 12%, doing that. So on the S&P, so just getting that call, and you don't have to go all the way out to the leaps. I tend to like a nice 6 month or so stock substitution, but everyone's flavor of stock substitution is different. But you're right. If it's only 5%, yeah, then you might as well go a little bit farther out, because you're right. And that also, obviously, you're paying a little bit there, listeners, but of course, you're getting all the benefits of the Greeks we were talking about earlier. You've taken your delta 1 position off the table, which is the underlying, swapped it with stock, which obviously has a delta that will decrease if the worst case scenario happens. So that delta will decrease as you drop. You will lose money at a slower rate. Of course, also, you will have vol. Vol will usually tick up in those scenarios. That will also help to offset how much money you are losing out there. So you have the Greeks working in your favor, capital efficiency working in your favor. It's much cheaper to buy an in-the-money call than it is to go buy the underlying. And, of course, you can take that other money, leave it in cash. You can do whatever you want with it. T-bills, you can go out, speculate in crypto if you want to get crazy. I don't know if that's the safest bet, but whatever you want to do with it, you do have more free capital at your disposal as well. So that's an intriguing one. I've been talking about stock substitution for a little while. It kind of depends, again, your flavor. Dan was talking about going out to the leaps. That's a very common way to construct your stock substitution type plays. Whatever your flavor is, probably somewhere at least 6 months, I would think, is kind of the sweet spot, 6 months to a year. Much beyond that, you're paying a lot of extra premium for not much material benefit. And much shorter than that, you have some other issues like, theta decay and everything coming back to bite you. So intriguing stuff. But yeah, I think, Vincente, we can all say we're pretty much open to the idea, especially now if you have some gains, just sitting on some gains. You maybe still want to play in case there is some upside, available still in this market, which it's up again today. So you can't say it's dead. And yet you also are worried about some downside. I could certainly see that being an intriguing play for you going out there. Let's go out here to MST. He or she wants to know, is there one option strat that you feel people really just don't understand? Well, Dan, remember we did that poll a few months back here, what people thought was their most misunderstood options strategy. And I do believe the winner was the time spread. I would put that in that category as well. I think anything that has to do with multiple expiration dates really blows people's minds a little bit. So I would probably vote for the time spread as well. I think the runner-up in that one, as I recall, was butterflies. I'll have to go dig up that poll to see exactly. I don't know if I'd put butterflies at number 2. I probably would pick something else, but I definitely would go for your time spread / diagonals at number 1. Dan, do you concur?
Yeah, I would say I would say it in exactly that order. As far as really common strategies that people trade every day that are misunderstood and a lot of times mistraded, are time spreads first and then diagonals. Absolutely, 100% agree. I would almost throw in straddles, but I think a lot of people understand straddles, but they're just hard to trade. So yeah, I'm going to stick with the team answer here.
Dan, while you were talking, I looked up that March 2030 vertical. Looks like you bid it up. It's going for 7 cents now. Dan, what have you done to that cheap vertical? 3 cents no longer, sir. You bid it all up to high heaven there. So listeners, 7 cents now for that 2030 vertical in Rocket, if you are so inclined. All right, let's get out of here on this one here. I want to get this one in from Kelly just because we didn't have a chance. We had to play around with our schedule a little bit to get the advisors option in before the end of the month. So there was no crypto rundown this week. So let's get this question in from Kelly T instead to help give you crypto heads some solace out there. Kelly T says, hello, lads. Love the show. Maybe she's from across the pond. Maybe a British lady writing into us here. Might it be possible? Definitely sounds like she's from across the pond. Might it be possible to talk a bit about the BITO options on the program? Your thoughts, any interesting trends or trades, your preferred positions, easy for me to say, and so on. Thank you so much for all that you do. Well, thank you for listening, Kelly, from across the pond or wherever you are writing in from. I do like being called lads. It's funny. All right, let's go on out to. I pulled some numbers for you right before the showtime here, Kelly, to break it down for you a little bit. Obviously, BITO, of course, listeners, the ProShares Bitcoin ETF that they launched last year to great fanfare, great acclaim. A lot of you in our listening audience, particularly your Secret Club fans who are a savvy bunch, noticed that collars were looking pretty favorable out there back when BITO was higher than the 30s or so. and you could sell upside calls. That's where the skew premium for BITO and Bitcoin and most crypto products tends to be in the call side. What it takes is a pronounced period of sell-off to really give the puts some bid. And as we come into showtime, that's kind of where we find ourselves now. Bitcoin has sold off pretty markedly over the course of the past few months. It's down not quite 50% from its all-time highs, but pretty darn close. ETH was around that level for a little while. So what we've seen now, Kelly T and everyone else who's watching this, is that the puts have kind of sparked to life. In fact, BITO right now is hovering near its all-time high for total options open interest. The biggest day for open interest was on, January 28th, just a few sessions ago. A little over 550,000 contracts were open back on the 28th. And right now, we're still hovering at 512,000. So it's still calls leading the dance, but it usually is 2.5, maybe 3-1 calls over puts from an OI perspective. Right now out there in BITO, it's much closer. It's about 272,000 calls and 239,000 puts. So as you can see, the puts have really come alive over the past month or two. And again, not exactly surprising. We have sold off quite a bit. That has sparked to life. So BITO is not quite 1-to-1 calls to puts, but it's pretty darn close. And what you're also seeing out there as a result is that the skew is nowhere near as big to the call side as it used to be here. Let's look really quickly at some skew levels. The highest we saw for skew on the last year was actually that same day, January 28th. So a lot popping off there on the 28th for BITO. So it is pretty strong. Let's see right now, 32,000 contracts on the day right now. Its ADV is 76,000. So that's higher. It was in the 50s last time I checked a few weeks ago. So this one has obviously ticked up. A lot of put players are coming in. So the collars, not as attractive as they used to be. The puts are much more juicy than they were out there, Kelly T. So that might give you a little bit of pause. If you are going to buy some of those puts and maybe you got to do something else against it, you can't just buy the put, sell out of the money call and get a credit the way you used to. It's probably closer to even money. Maybe the put's even a little bit bid. I'll have to go look and see. In that case, you're probably going to want to add a farther out of the money put kicker against that to get a little bit of extra juice in there. Of course, as long as you're fine with mitigating your protection out there. But intriguing stuff out here. BITO, far from done. It's busier now, you could argue, than it has ever been. Dan, Kelly T wants to know if you have any thoughts. Have you been watching BITO and any preferred positions or any interesting trends and so on, she says, in BITO that you've noticed?
I have not actually been trading BITO. I've been trading straight crypto somewhat. So, yeah, I mean, I don't know. I mean, as we were having this conversation while you were talking, Mark, I was looking because I would think that it would be a lovely opportunity to sell some puts or put spreads. But I just, I think you'd have to go out much too far to get a strike low enough that I'd be comfortable with. And plus, this does have that sort of contango decay. I'm not sure if there even is a proper name for that phenomenon, but so I think the farther you go out, the less attractive selling puts is, which is probably one of the things that's factored into that put skew right now. So, yeah, I mean, I guess bottom line is, boy, I sure would think there'd be some put selling opportunities, but you just can't really, I don't feel like you can get enough. I mean, maybe selling a 44-day 16 puts. I mean, I think that's going to go to 16 in 42 days. I don't think so.
You might want to buy some Bitcoin if it gets down to that level, sir.
Yeah, I'd rather do that, you know?
I'm looking here right now. You're right. I just pulled it up myself. And the skew is kind of pretty much even right now, which is a big deal for BITO. Usually, again, the calls are bid. We're hovering a little bit north of 23.50. We're at about 23.62. So the 21.5 puts, two handles out of the money, these are going out in February, listeners, are about 55 cents at 60. And the 25 half calls, I should say, are about 59 at 61. Obviously, we're a little bit closer to the 25 half strike than the 21 half strike, so that plays into that a little bit as well. But they are roughly similar. They're both going for about 60 cents right now. So you're not seeing that premium to the call wing that you used to see for the put wing. So for Dan's consideration, if you are thinking about getting into the downside, that could make it more attractive. You're getting a little bit more juice for the puts now than you traditionally would. But if you're thinking about collars and some of the other things, you're not getting you could do the 25 half, 21 half collar for no money right now. That's your zero cost collar out there. Whereas usually you could probably get a little bit more room to run to the upside or get a nice credit for it. So I guess it depends what you're looking to do out there, Kelly T. But it is intriguing. BITO is by no means dead. It's putting up some numbers out there. Let us know what your thoughts are out there. Listen, are you looking at this one? Have you identified some strategies you want to take advantage of? Is this a little bit juicier put wing, making you think about going to the dark side like Mr. Dan? Hit us up. Let us know. All right, Mr. Dan, that music means we come to the end of our journey today. Man, what a journey it was. We started off talking about rating, got into gamma and gamma squeezes, got into crazy verticals and rocket, out of the money puts in BITO, stock substitution, all sorts of stuff, sir. We had quite the wild ride today, sir.
Yeah, how about it, man? It sure was. Talked about a lot of really great stuff.
Before we go, Dan, our chat wants to know, are you playing any earnings today?
Yeah, I just bought a straddle in CTSH, which I may or may not have done well on the podcast.
I can always tell when I hear you typing that you got something cooking over there.
Actually, to be fair, I put in the bid before the podcast. I got filled during the podcast.
The worst offender for that is Andrew. He's putting on crap all the time while I'm talking to him, and he's getting mad at his fills, and he's yelling. I always know when he's getting a little ornery that some of his fills are not going his way. So I've learned to know when his trades are not going with him out there. But Mr. Dan, if folks are intrigued, they want to talk to you about selling BITO puts, or they want to talk to you about rating or stock substitution or any gamma squeezes, any of the legion of things we discussed on today's far-reaching show, where should they go? What should they do?
Easy breezy gamma squeezy, Mark. Just have them make their way over to markettaker.com, and you can click on the contact us link there. You can even join for free, and for a limited time we're actually allowing you to join our MTM community chat room for free when you do that, so you can always hit me up there with a DM and interact with our other students. We actually got a lot of listeners who are in that chat room, so that's how you find me, folks.
That's where he hangs out. I have to drag him out of there every week to do the show, listeners. So when he's not talking to me, he's hanging out in that room and rating and putting on fills and everything else out there. So check him out over there. MarketTaker, 2 T's in a row.com is the place to go. And we got to get on out of here. But don't worry if you need a little bit more education in your lives. Brian will be back in a little bit under 2 hours, I do believe, to go live to tape for his OPR. So once again, if you're not listening to the full network, or you're not subscribed to OPR as well, you're going to miss that one. He's always got great stuff, a lot of great idea generation. He's always talking about earnings season is his bread and butter. He's got earnings trades for days on that show. So check that one out. He's also talking about strategies, answering a lot of your questions. Brian and I haven't huddled up in a little bit, so maybe it's time to get one of those going pretty soon as well. So that could be fun. So stay tuned for OPR if you're listening on demand. And of course, if you want to join us in the secret club to get all the fun we had a great pro Q&A this week with Mr. Jem Carson over there from Kai Volatility Traders, Kai Volatility Advisors, talking about all the stuff we're talking about here in a lot more detail, talking about gamma squeezes, about vol, about skew, all sorts of fun stuff. Stock substitution, I think that popped up there as well. So a lot of great stuff. You can check out that, of course. If you join after the fact, you can listen to it as well as, of course, participate in all of the future segments, including a lot more trade ideas percolating up there on the Options Oddities every Friday. You know, it's still a very unusual activity-focused show, but a lot of trading ideas are coming along. A lot of it is I'm doing a show, and then Andrew or somebody says, I like that trade, he's going to put it on. And then, or I'll see something that he's talking about and say, I like that trade, I'm going to put that on. So we end up having quite the portfolio to manage as a result of that show. So tune in every Friday, see how it's going for fun stuff. And of course, we'll see you back here next Education Wednesday. Another great episode of Options Bootcamp. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.